You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday the 6th of November 2017. We see the S&P 500 up 0.33%, the Nasdaq 100, the Qs as we call it, up 0.96%. Beautiful after we had that weekly vertical crossover for the week ending Friday the 27th of October. Those of you who jumped in this past Monday are happy as clams, I know. We see that TLT, the 20-year bond fund, up 0.27% and gold down 0.47% for the day. Let's look at the S&P 500 first. We see, of course, that it continues to move up. We are going to have to redraw our trend line just a little bit. Didn't move up at quite the same up angle. But again, we had a weekly vertical crossover all the way back on the week ending the 29th of September. And we continue to see the S&P 500 climb. We look at the two-day chart. And again, going sideways a little bit for some time. But again, trending up, continuing. And again, still a crossover going up on the two-day chart. And as we look at the 4-hour chart, what do we see? Well, of course, those of you who were following saw the crossover happen right there after the morning. And we see things going up in the afternoon. What do we do with that? We watch the market Monday morning. And if you weren't already in, you stayed in during this sideways slide, of course, you're still in. Those of you who got out, took your money, and enjoyed the ride, you might, and again, your virtual dollars, because we're not a stock calling service, we're an education firm, but you notice now that we do have another 4-hour crossover. See what the market looks like around 10:30 after idiot hour on Monday morning. See if you can find a jumping in point. All indicators are up. And let's look at the weekly chart now. Move on from the S&P 500 to the Qs. Way up for the day, 0.96%, ending the week above the Bollinger Band on the weekly. And we see movement on the two-day. Trend line is above and the weekly well above. We see the weekly continuing to build, derivative oscillator gaining energy, and the price percent oscillator moving up at a nice angle. As we look at that two-day chart, we see that it, again, not going up at the same speed as far as price movement, but the price percent oscillator pretty much going up the same kind of angle, and the derivative oscillator continuing to move up, not as high above the Bollinger Band over the course of this last week. And again, pretty much topping out about where it had over, a little bit higher the wick is showing us during this week. But again, up movement continuing as we look at our Heiken Ashi candlesticks, as we look at the, and that is, I'm sorry, on the two-day chart. Of course, on the weekly, which we covered, it's continuing to move up quite strongly. And then as we delve into the 4-hour chart, what do we see going on? Well, of course, we had our jumping in point back there at the end of the prior week. On the 27th is when we had the weekly vertical crossover. We had the jumping in point on Monday morning, right around 10:30 up to about the noon hour, somewhere around the 151 mark or so. And of course, we ended up at 152.92 by the end of the week. So up about $2. Not too bad in anybody's book. And we will just continue to monitor where this thing keeps going. As long as things look good, do keep your eye, as we talked about, derivative oscillator losing energy. So keep your eye on that 4-hour chart as we go into the new week. Those of you who jumped in to that weekly vertical crossover trade, doing quite well. Now, what do we see happening in 20-year bonds? Well, we had a weekly vertical crossover going down back on the 29th of September. Had a nice down move the following week, a sideways slide, a great down move on the week ending the 27th of October. Past week, though, we pretty much have a spinning top and some up movement. Now, the up movement is well within the down candle of the prior week, but it did move above the weekly, well above the two-day trend line. And, of course, as we look at what's happening on the two-day chart, it, of course, crossed over with this latest candle that closed out on Friday, which means that any down move would be ended at this point if you didn't get out back when things really started dropping off and moving over all the way back on the 30th of October, that two-day candle where we saw the spinning top and we saw the telltale signs as things started to move through, particularly on the 2-day candle ending strongly up on the 1st, where we saw things press through both the 2-day trend line and the weekly trend line. And of course, everything's been confirmed with this latest candle. What do we see going on the 4-hour chart? 4-hour chart continues to trend up fairly strongly. Derivative oscillators losing a bit of its energy, but the price percent oscillators continuing to move up. So don't have a trade in TLT most definitely at this point. We'll just continue to see how things shape up. If indeed we have a trade develop in the future, we'll keep you posted like we do every day. Lastly, we'll look at gold. Gold, of course, let's go to the weekly chart first. Remember, all things being equal, the market always tends to move, or the ETF, the stock, whatever, in the direction of the largest chart, which is the weekly. Weekly is down. Gold slid sideways for the weeks ending the 13th of October and the 20th, and then the 27th. And the week just ended on the 3rd of November, also down. But what do we see? We see derivative oscillator continuing to gain downward energy, and the price percent oscillator and price, of course, itself. As we look at the 2-day chart, we see that things have really sort of bottomed out there, somewhere around about the 120.70 mark, something around the same place where it bottomed out back on the 6th of October. And let's see, also, as we sort of go back in time a little bit, we see things bottoming out. Well, have to go way back in time. But around that 120.60, 70 mark, we've got a little bit of basis for it going back about a month or so. But what do we actually see happening now? Well, the last two-day candles, we see that we have green dojis, which again means tending upward, but at the same time, lots of indecision. Price movement over the course of the last 2-day candle was somewhat up in that it passed through the 2-day trend line, still well below the weekly. But as we, of course, tune in to that prescient 4-hour chart, what do we see going on? Well, of course, the 4-hour chart had rotated over going up at noon in the morning of Wednesday, the 1st of November, went up, peaked out on the noon candle on the 2nd, and then started rotated over going down. Still hasn't crossed over going down yet. But again, if we do see that crossover going down, it would give you every reason to jump in, because the 2-day and the weekly are still in confirmed down moves. But that 4-hour chart may surprise you and bounce off that. Again, it's going to take more energy to push all the way through that 120.70, 120.50, something around those marks. If it starts blowing through the 120 mark and you have a strong crossover going down, of course, you could feel really good shorting gold or buying the inverse fund. Folks, that's where we are. And again, in your virtual trade. That's where we are as we end the week and on the 3rd of November, and we go into the new week of Monday, the 6th of November. Thank you so much for being with us. We love to hear from you. I hope you've been filling out your daily market worksheets. Every day the market is open, except, of course, for this special broadcast that we do for Mondays. That is our comprehensive review, and that's when you use your weekly market worksheet. When you do the practice trades that we talk about, use that trade worksheet. How do you get these worksheets? You subscribe to chartingwealth.com's daily market reviews by going to our website, Charting Wealth, and signing up. It's absolutely free, and you get all of this information in each daily email we send out with our video. God bless, my friends. Thank you so much. Follow us on Facebook, Twitter, Instagram, YouTube. Subscribe to our YouTube channel, please. Thank you guys for making us, I think the highest we are right now is like number 4 in the world when it comes to stock trading, stock charting podcasts. We so appreciate that. We do work hard every day to try to bring you this information. Thank you for rewarding us with those good metrics. God bless. All the best from the whole team here at Charting Wealth World Headquarters.